So here's PNC Financial. We just got some earnings reports from them, and they did a power move here. So PNC had a stake in BlackRock, a 22% stake in the hedge fund, and so they just had to do a bunch of loan loss provisioning, just like all of the other banks are doing now, just preparing for the defaults to start coming in. And so they sold a huge cash position, which doubled their profits for second quarter. So they're posting huge second quarter numbers, which is entirely from selling BlackRock. And so yeah, here's some info on the loan loss provisions. 2.46 billion more in loan loss provisions. And so PNC is the 7th largest bank in the U.S. And this is one of the only, or it is the only stock that Warren Buffett bought shares of in the first quarter. So this is an interesting one to look at. And so to avoid any liquidity issues, I mean, this sale of BlackRock way overshoots the liquidity issues and the amount that they're putting in loan loss provisions. But there was a quote from the company saying that that's enough liquidity to, potentially acquire assets or do some kind of mergers in the coming recession or whatever you want to call what's happening now. But this is a big cash position that they have now. So PNC is not in any kind of liquidity problem for sure. And all of these banks are doing the same thing. They're bolstering their account to handle defaults and bankruptcies, because all of these banks are expecting to lose money as people don't pay on loans and start defaulting on them. And so, yeah, I guess we can see if there's anything interesting here. So if you exclude the BlackRock sale, the actual net loss for operations was 744 million, which that isn't it's not a huge number in terms of something like what we saw from Wells Fargo or something like that. But all the banks are facing losses now. They're all bolstering accounts of cash that they are expecting to lose when these defaults start coming in. And the banks that have more diversified operations or are involved in investing or markets seem to be doing better. And so, yeah, PNC is, it sold BlackRock, so it looks fine. All right, so here, so Warren Buffett's stake, I think it's a little bit over 2%. I think it's 2.2% of PNC. So it's not a huge stake, but this is a stock that Buffett was buying, which is interesting. And this is probably the biggest cash position of just liquidity that we'll see with any of these banks right now, because that was a huge sale. And let's get in here and see how this earnings report is affecting. So we're getting a little miniature kind of parabolic reversal on this news report. It tried to jump up and just came back down to where it was. So not really much going on. This is all pre-market. I think the market's opening in about 45 minutes. And so you get to see like the London trader activity and things like that in here. But this is a US bank with a relatively weak chart. And so what I've been looking at with the banks is kind of pointing out, see if the DXY is doing anything else. Yeah, the DXY is breaking down farther. So just seeing if we're getting sort of inflationary or deflationary signals. And if the dollar is breaking down, that would be an inflationary signal. And then also the bond yields, which have been flattening out right now, and they're continuing to kind of flatten out. And then if we just look at like the 10-year yield, you can see that it looked like the bond yields were going to start trading up, and now they're pushing back down a little bit, but they haven't started breaking down yet. So this is the kind of thing, as far as looking at PNC for a long-term position, that's kind of the things that I'm looking at. I mean, the wave of solvencies and bankruptcies has just started now, and the government has been pushing it off, and I think we'll continue to do that So this could be a really long, drawn out kind of solvency phase. I don't know how long. Could be a couple of years worth of this stuff. And the Fed has announced they're trying to stay near zero interest rates, and I think that's true. I think they're going to try to do that, and we'll see how that goes. The Treasury account has huge cash pile, like 1.6 trillion of inflationary money that the Treasury can pump into the economy, and then the Fed reserves are not generally inflationary, and so they're kind of going back and forth between the Fed and the Treasury and trying to play with the inflation rates and try to control the interest rates the best they can here, which is I don't know. It's kind of a hard one to predict right now because it could really get out of control in either direction. And as of right now, it's not. It's been staying pretty stable. We're not getting big indicators of a break either direction. But yeah, we are getting. Let's look at the XLF. So here's the whole financial sector. And so you can see the financial sector in general is a little bit stronger chart than the PNC chart is. So, I mean, that could potentially be a low point to buy at PNC if we get into more positive market conditions for the banks. Like if inflation picks up and interest rates start picking up and, it increases the interest spread for the banks, that could be positive. But we're not seeing any of that yet. So it doesn't look like an obvious time to buy financials to me because we have, who knows, a year of solvency losses that the banks are going to be facing, and low interest rates means really poor profits for the banks. So, sort of buying banks at the beginning of a recessionary period is a tricky one. That's a tricky one, but yeah, here's a look at the financials. Got a little bit of a up move into the beginning of earnings, which is interesting. So the PNC earnings came in pretty well. JP Morgan earnings were okay. I mean, not great. It was like a minus 51% on earnings, but it was better than expected. And then Wells Fargo was awful. And so overall, I mean, the whole financial sector to the financial news that's come in so far has barely really moved. I mean, this move up was prior to earnings, and then it even moved up a little bit more since we started getting earnings, and now it's just kind of whatever. It's not doing anything dramatic, so I mean, it doesn't look like anything too crazy on the earnings reports. And I just I don't see the environment where banks would start doing well right now, but the prices are low, so I don't know. I think they could definitely go lower, and it really depends on what the Treasury. I think what the Treasury does is a big deal as far as inflation goes. And so here we are on the general S&P, and so you can see we're trading parallel to where the previous top was, and near the top of that range. And we're going to be coming into trading today. And so I just have these, long-term trend lines circled here. So this is a 2-year support line that we're underneath and a 12-year support line that we're above. And so it looks like, we're trading up out of this expanding wedge zone now. And this, the top of this here is the last resistance point until we should be getting a move up to here. And it looks like the pre-market activity wants to do that. So yeah, this could be. We'll see how the cash trading comes in today, but I would not be surprised to see it move up to here now, because this is sort of the last resistance area on the bullish side before a move up here. And then this is a big resistance area on the on the underside of this 2-year bull market line. Before this can be looked at as sort of a bull market scenario, I would definitely need to get up here and not crash. So, I mean, you can see what happened last time we got under this line is we had a huge move down. And so yeah, this whole area is questionable. And once you get out above here, it's less crazy. And so I could flip through the momentum and see what it's looking like here. Yeah, so here, I mean, this is just slightly bullish, sort of on the long term right now, or the medium kind of term. And then as we come into today's trading, as we just zoom down on the hourly charts, it's all on the bull side now and making a bit of a move up. It's a pretty decent divergence across the charts, and then now it's stalling out as we come into the open. So the momentum was bullish, and it's on the bullish side of the chart. And so this is mostly bullish momentum. Yeah, even down to the, so yeah, this is a slight bullish momentum. So upward movement here is kind of what I would expect on the cash trading to open, just to start here. But this zone is a ton of resistance. And so now we're just above this last resistance area relative to the previous peak. And so if it can just stay above this area into the opening, then that should be good to get a move up to this area here. And this is sort of the bear's last stand on this on sort of a deflationary model. And so we have a huge volatility range here. And I set up this deflationary model that's similar to the Nikkei or the Great Depression, where you reverse off the bottom of these long-term bull market trend lines. And yeah, and here we could see the bulls testing this last trend line here, and we'll see what kind of activity we get this week. But the earnings reports are coming in, and they don't seem to have much of an effect on the market, or the market's even liking them a little bit, which is interesting because they're not coming in super pretty, but yeah, it'll be interesting to see how the market reacts to that. And then the one thing that I was looking at here, yeah, how's the VIX doing now? Okay, so the VIX is chilling out a little bit towards the move that we're seeing now. But this VIX trend here in this direction, as the stock market is sort of going sideways or up itself, is that is a little bit suspect. Usually the VIX, as the stock market is flat, should be flat, and as the stock market is climbing a little, a normal VIX reaction to what we're getting in the last few days should be like down. It should be flat or a little bit down. But that's not what we're getting. We're getting a building volatility, sort of a building fear here, reading as the stock market is climbing or going sideways. Yeah, so this is that's an interesting thing to see on the VIX. And so we can see bigger moves kind of back and forth here. But I guess that's my target for now, since we're up above here. Yeah, if this holds past the open up here, then I just have a target of coming up here and testing this over the next 2 days. And this is going to be a really important area to see what we get when it gets up here. And people should be getting pretty bullish as it gets up here too. And so things like the put call spread should be really important, which I think I have in here somewhere. Yeah, here's the put calls. So it looks like 2 days ago we had a really big call spread, and then it's coming back down towards calls now. So that's another big thing to watch, because the last reversal that we had a big, like we had the VIX trending up when it shouldn't have been trending up, and we have that happening again, and we have a really big call spread here, but not quite as big as where we got the reversal last time. So there's a few more bear indicators to get through here on the upside before this thing is going to get into an actual kind of bullish area. So we're still in between a bullish and a bearish kind of area. So breaking down here is bear market area, and breaking up here is bull market area. And we're in between the trend lines. We still have the long-term moving average trending down. And so, we want this moving average for the bulls to start trending up and to be support. So we're not quite there yet. But we're coming in with a positive momentum, positive move here. And yeah, what's it? Wednesday. So we'll get tomorrow evening we'll get to see the next updates to the balance sheets in the Treasury General account. But I don't think they're adding any extra liquidity. They're just doing their small amount of normal purchases now, and the Fed balance sheet's actually coming down since back here somewhere. So this whole area of sideways choppy movement in the market that we've gotten here has happened when the Fed balance sheet stopped expanding. I mean, it was above 7 trillion, and now it's even below 7 trillion. So it's come down. It's come down over this period, but the market, well, hasn't crashed. It's gotten choppy and kind of weird, but the market's holding up. So we'll see. We'll see if the balance sheet numbers have started to change or not soon. And it doesn't look like the earnings reports are scaring the market too much. So this is not investment advice. Yeah. So yeah, I think that's kind of the target. That's kind of the target I had picked out as the big drama spot, really. And I think this is an area where the market could reverse and you could get a high call spread. And I think once it starts getting up here and clearing this previous peak, I think people will start getting really bullish, and they're not going to expect this to be an area of a bunch of resistance. I don't think anyone has this area on their map, but this is a huge area of resistance on my model. And so I'll definitely be watching it. And it could happen. Yeah, it could happen this week. We'll see what we get. This could be a pretty interesting week with high volatility and a sneaky reversal point possible. And yeah, so as of now, though, we're not in a bull or a bear market. We're in between, kind of flopping around still. And the Fed and the Treasury haven't made another move yet. And I don't really expect them to do that until something goes wrong. And so, oh yeah, we'll see what's going on. Oh yeah, what's like Tesla doing? I mean, the Qs were starting to pull back, and now they're just not really pulling back. And then Tesla went crazy a couple of days ago, and it pulled back a little bit, yeah. So it's not looking like a big breakdown now. So I think these kind of tech stocks for an actual move down are going to need to actually make a move down. So those are ones to watch. And then yeah, the VIX is acting a little weird, but right now there's not a whole lot of signals of anything changing, today. But we may in the next week or so get some actual signals of inflationary or deflationary pressures coming on, and see how the government reacts, and see how the trading on this leading sectors react to all that. All right, so I think that's good for now. PNC is flush with cash, and so I guess the thing to look out for them is acquisitions coming up. And I don't know, I haven't heard any news on what they're trying to acquire. I think they're just kind of holding a cash position and seeing what's going on. But PNC is pretty interesting because they do have a huge cash position, and they may make a pretty interesting move soon. Yeah, so happy trading, and careful this week is a dangerous spot, and the volatility is trending up again. So yeah, cheers.